What's going on, apes? Welcome back to the channel. My name is Tyler. I'm glad you can join me this afternoon for another very important AMC update video. So we're basically going to go over everything you guys need to know. We're going to talk about the charts and how this is not as bad as it could potentially be, as well as go over the Ortex data, go over the Fintel data, see what institutions and hedge funds are actually doing with their AMC positions via their 13F filings, as well as talk about the fraud and manipulation that is going on with AMC stock and much more we will talk about in this video. But first and foremost, I do want to acknowledge a major problem that I've been seeing, especially over the past week or so, and that is obviously spam comments. Guys, if I comment on a comment of yours, you will see this. It will be highlighted in gray. If any one of these guys pinned by the creative investor or creative investor spelled just a slightly different variation, that is not me. Never listen to people like that. You can kind of tell what is bots and what is not. They're trying to take advantage of everybody that is newer to the market, that isn't as familiar of what YouTube spam is. So YouTube doesn't do a great job in getting rid of this stuff, so I have to come out and make videos. I'm gonna make a video later about it, but it's very important you guys understand that. They will comment on videos 10 seconds after they're posted. Never fall for that, ever. It's always a scam 100% of the time. But as far as that is concerned as well, I'm not a financial advisor, not a financial planner or your dad, so don't listen to anything that is said in these videos. Always come to your own conclusions and do your own due diligence, as you should when you're watching any other YouTube video. This is merely to give you guys the information, the factual data, as well as my inputs and my opinions on what is going on with AMC and all the other stocks and strategies that we cover on this channel. So let's get into it, guys. Let's first off talk about the technicals, and obviously just as far as last week, we did hit this high at $46.50 per share. We have since come down almost $10. So from face value right here, it looks to be very bad, which it's not a great situation. We're currently sitting at $36.89, but it's not nearly as bad as we have seen in the past. Coming down to really Thursday and Friday, especially Friday, pretty much every Friday is very red. And the fact that AMC was only down less than 1% for the day, I think is a very great thing in and of itself, but you're still seeing that level of fraud and manipulation and corruption that is going on with our order flows and behind the scenes with the market makers, if I do say so myself. Now, that is only a opinion, guys. Nobody's trying to get sued here. That is my opinion. I think it is clear when you have been following this stock for as long as I have. But general point here, guys, we are still higher than the lows that we have seen at $31.10. We did see this low. We retested this low yet again July 19th. So we are still about even $5.50 from this low. So we definitely have a good cushion right here, but it is still 50-50 as far as if we are going to break back down to our $34 support level, or if we are going to break out to the $40 level, which has acted as a bit of a resistance. Now we are firmly in the middle of this, literally almost down to the penny. We're in between this $33 support level, $34, whatever you want to call it. I think it's about $33, and then the $40 price. We're literally sitting at $36.93, so it's almost perfectly in the middle. We do see the 50-day moving average is at $37.89, so if we can break this to the upside with some decent momentum, we should get that gap up over $40. We're gonna have to watch to see if we can find that solid support over $40 and actually hold that for a couple of days. So that is basically what I'm looking at as far as the technical analysis. We are in a death cross where the 50-day moving average has crossed under the 200-day moving average, so that is not a great thing. It's usually a sign that the stock is going to keep going down, but this can change at any given moment. So it's not something that I like to use per se as much. We were still in this death cross this day that we got a 25% positive day, so it really doesn't tell you too much. The MACD has went slightly bearish as well. Those are two factors that I don't necessarily like to look at when it does come to AMC stock. With other stocks, they are great technicals, but when it comes to this one, it doesn't seem to actually correlate the same way it does with other stocks. Now let's get into the Ortex data. Keep in mind their calculations have been very off. It's unclear whether they're even getting their data from responsible sources or if you can trust this whatsoever, but the short interest change for the day is positive 1.76%. Return shares 1.73 million, borrowed shares 3.38 million, so that is a borrow change of 1.65 million. Current short interest percentage of free float at 14.77%. Current shares are sold short of 75.55 million. Now this data, to me, in my opinion, is simply not true. We've seen a higher short interest when we were at highs when we were about $70, even in between about 60 and 70, 55. We've seen a higher short interest. They're essentially saying that we've seen about 25 million plus shares covered this whole time that we have been selling off. That is not the case unless a lot of apes really started to get paper handsy and sell out of their positions. And from what everything I can find, that is not the case. So I don't think these numbers are accurate whatsoever. But like I said, take them with a grain of salt. The share utilization is at 88.15%. So still a relatively hard stock to borrow. The share utilization is actually going up a little bit, meaning there's less shares that are available to actually be sold short. Now, another explanation of why we are seeing all these return shares recently could be the free flow on loan, which is 18.32%, which is higher than the 14.77% short interest or estimated short interest. So you may be seeing some shares that are being borrowed, right, being lent out, but not actually sold short yet, that just get returned. They don't want to deal with it. That could be the case. So we're going to move on to the Fintel data, but first off, I want to explain something to you guys that is a very bullish thing for AMC stock, and some of you guys may not know this. So as we do know, AMC will remain in the Russell 2000. This is not new news. We knew about this, I believe, a month or even longer ago, that AMC will remain in the Russell 2000, but AMC is the biggest allocation in that index. So basically, when you are buying this index fund, the fund goes out and buys the appropriate amount of AMC and all these other stocks. But when you're doing that, AMC gets the majority of the capital. So I do think you are starting to see this being reflected in the Fintel data. Take a look at this, guys. This was reported to us today. This is a brand new position. This is the darker green. 13F filing, State of New Jersey Common Pension Fund D. 229,643 shares, value of 13 million, exactly 13,016,000 dollars. So a fairly large position to be seen, and odds are with these pension funds, they're not flipping out of stocks left and right. So odds are this will be held for a long time, and I do think this is a glimpse into what you can expect with the stock. And ultimately, I don't think we're ever going back down really under $20. I could make a justifiable valuation of AMC stock in between $20 and $30, depending on what variables you use to predict future earnings, free cash flow, all this other stuff that people are very interested in when it does come down to a fundamental valuation of any stock. But in particular with AMC, I think there's much more potential upside here than potential downside. But for the most part, just to generally sum this up, you're seeing a lot more buying and holding than you're actually seeing selling. Obviously, the red is hedge funds, institutions that have fully sold out. The green is brand new positions, whereas the white and the gray are positions that are just still the same, that they haven't done anything with. So the most part over the past couple of weeks, really since about July, let's go July 1st, and that is from here on up, you're basically seeing a lot of holding and a lot of buying. You're seeing some level of selling, but it's about a 3-to-1 ratio of buys to sells. So I think this is very good because obviously, as we do know, like I've called out in many videos, before we did see this rally in between June 1st and June 3rd, when we went up to almost $80 per share, you've seen virtually zero sells from May 18th. From May 19th, you did not see a single sell being reported in the 13F filings all the way up until after this last gamma squeeze did happen. So I think this will or possibly give us a glimpse into when the short squeeze could happen, when hedgies are really getting on our side, because this is going to come down to a two-front war. We're going to have hedgies, institutions that are on our side of this. You're going to have shorts that are on the other side of this, and ultimately each individual hedge fund and institution doesn't care who they burn. They don't care if they burn other hedge funds or institutions or if they burn retail traders. They're in this to make money, gain new clients, and by doing that, they have to put up good numbers, good returns. So that is what they're in this for. Once the short squeeze does happen, I think you'll get a lot more of these filings being reported as new positions, or at least holding on to their positions. You don't want to see selling, obviously, but when it does come down to the overall short squeeze, the more hedgies, institutions that do buy the stock, the better the overall short squeeze will be. Now, obviously, there's no change in the actual institutional short sellers. As far as today, there was no filings being reported. The last one we do have is a put option for 26 600 shares. So you're not seeing hugely large short positions, but you're not seeing these shorts actually getting out of these positions whatsoever. You're virtually not seeing any sells from May 17th. So there's a lot of shares that will have to be covered and bought back. Citadel Advisors being a big one, Jane Street Group being another big one, Bluefin Capital Management, and Jane Street Group alone has almost a little bit over 4.5 million shares. Citadel, a little bit over 5.5 million shares. So you're looking at some very large positions that will have to be covered at some point in the future. Now, let's get into a little bit of the FUD and what I am seeing as far as the short attack when it does come down to Thursdays and Fridays, but specifically on Fridays. Now, we know hedges, institutions, they don't want contracts to expire in the money because they will be forced to go out on the open market and buy these shares to sell them to you at a higher price. But they still don't want to do this because sometimes there is that margin of error where they will lose money. And on the amount of money you're talking about, hundreds of millions of dollars potentially, even a small margin can be a huge loss. So they definitely don't want that. You're seeing a lot of FUD being spread literally over the past 48 hours, a whole new level of FUD, guys. Even after the 25% move that we did see, all FUD. Nothing good was being said about AMC stock. So this right here just shows you the high incentive they have to actually write these articles. One, they're getting paid because a lot of you guys watch them. A lot of new apes may be getting fooled by the stuff that is in this. We all know the deal. Nothing has changed with the AMC short squeeze besides the price. But nevertheless, I do personally think they may be getting paid by somebody out there. We're not even going to go as far as to saying any names. You guys already know what I am implying, but it is quite possible here. Every single article is FUD. Look at this. AMC stock cult tries to raise capital in deceitfully apish fashion. Why shares AMC and GameStop and Sundial Growers are all trading lower today? Literally everything. The damaging AMC Entertainment data point no one is paying attention to. AMC CEO is buying the dip, but it's not what you think. Come on, dude. Come on. We all know this trade here. They're not fooling anybody, and if they are, please just do whatever you guys want. I'm not a financial advisor, but this stuff, a lot of this information is not factual in the sense of when it comes down to the overall short squeeze and the technical trade that we do have going right now. I am very bullish on AMC stock, but that is pretty much everything you guys need to know as far as today's updates, what to be watching for, what I do think is going on with the stock, and literally everything else. So with that being said, make sure to hit that like button on your way out of the video, as well as comment down below and consider subscribing to the channel for more videos like this. Also, if you guys want to get totally free stock in about 3 minutes time with no deposit necessary, no need to link a bank account, check out the link down below for public. It literally takes 3 minutes, so you get your free stock instantly. There's not even a wait time involved, as well as if you guys want to be notified in real time every time a trade is bought or sold, check out the link for the buy and sell alerts. We do it all. We do day trades, swing trades, longer term trades, long-term investments with stocks, options, and crypto. We literally do it all. So check those links out if you have not already. Those are great places to be. And with that being said, I hope you guys enjoy the rest of your night. I will see you in the next video.